maybe, just maybe, the Fed is right. Maybe inflation's not going to explode. The economy is improving slowly, and they actually got their fingers on the pulse of what's going on. Maybe Lee Munson's here to take the Fed's side. Lee, gutsy position, man. The Fed got this right because all my smart guys love to rant and rave about how they're just foolish.
Oh, those smart guys. Yeah, you have smart guys who sell books, who sell newsletters, and tell people to go buy gold and keep it overseas. Let me tell you some other ideas that your viewers should, understand. Number one, why is the Fed printing money? Okay, we're trying to get our nominal GDP up. We're trying to get the economy going. And we haven't seen core inflation rise. And in fact, when you look at what's happening, Jeff, we have secret austerity happening in this country, despite this false premise that the government spending is completely out of control. Back in mid-2010, the amount of federal deficit spending versus GDP was 10.5%. Okay? Now it's 6.5%. So the government, as part of our GDP, is spending less, 40% less than they were a couple years ago. Okay? So where is that slack? What are we going to do about that? The Fed's been printing money to pick up that slack. Okay?
But isn't inflation right on the horizon?
The stock market is going up, right?
The people are, it's the stock market and all that business. The counter argument is going to be the stock market's manipulated by these artificially low rates. From the artificially low rates, everything else is priced. We've got risk-free assets. That's what you earn. Everything else is priced from those risk-free assets. So that's one side of the argument.
The stock market's rigged. Newsflash, 400 years of history. Of course it's rigged. But it's a false premise. We do have fundamentals. Corporate profits are up. And that spending, that federal spending as part of GDP, it's coming down. So the Fed did work. I don't like it. You don't like it. I don't like all this debt. It still worked.
Now, what about inflation? I can counter every single one of your arguments because I read all those guys too. But you know what? Inflation, it's right around the corner. That's the other reason you got to buy gold, because we've got this hyperinflation that's been poised like this sword of Damocles to fall and chop off our heads at any minute. You don't think that's coming? You don't see the inflation out there?
I'm sure there'll be inflation eventually, and you can tweet me when it happens. But we have core inflation going up fairly slow right now. I mean, we're talking about 0.1%, not points, quarter over quarter. And you know what? I can argue my arguments as well. I'm just not so sleazy that I'm sitting around trying to sell, old guys in armchairs who are mad about some guy winning a second term, that I'm going to take my, IRA money and put it into, gold, cash for gold. But Jeff, you have to think about this. The Fed moves slowly. Okay, they move in multiple steps. There's about a half a dozen steps that they're going to need to take to start raising rates. Now, to that point, I do think that we've bottomed out on the 30-year bonds, and I think there's very little upside to buying AAA corporates. I do think that we're near the end of how low rates are going to go. The question that investors need to ask themselves is, how quickly are those rates going to rise? So far, we have a very slow rise. And the best part is, we've got the Fed telling us what they're going to do 2 years out.
Well, that's
this is better than activist shareholders fighting and squabbling.
But the big argument here, Lee, I got to cut you off.
Of the universe.
Let me cut you off here for a second.
Levers,
because
telling us their game plan and essentially tweeting it to everybody.
Okay, so let's talk about that.
So much better than when I was
talk about that communication.
You had to guess what the Fed was going to do.
Do you take them at face value, though? I hate to interrupt your screed because I'm a guy who enjoys a good screed. But do you take the Fed at face value in terms of when the game is up? Because they've given us the rules. They've said what the unemployment rate's going to be and where inflation is going to be before they become less accommodative. Now, do you take them at face value, and can the market survive that?
Well, I think that one thing that people have to do is, there's two sides to this. Number one, the central banks lie because they have to lie. But that doesn't necessarily mean that if the Fed says we're not going to change interest rate policy until jobless rates go down to 6.5%. They could, let's see, screw around a little bit. There's been talk from the St. Louis Fed governor saying, hey, listen, once we get down to 7%, we're going to ratchet up by a 10% here, 10% there. We might take off $15 billion a month if we can get unemployment to sort of get to 7% below. But I do think that one thing that it's not about face value. It's about there's a process to the Fed. And that's always been there. It's always going to be there. And whether or not they do exactly what they tell you now, there is a process, and you can see it, Jeff, for miles. And that's the advantage that investors have, and it's what makes interest rate stuff awesome, because it's slower moving.
All right, it's slower moving. Lee Munson's got news for the Chicken Littles. The sky remains aloft. We want to know what you think. Is it about to collapse, inflation explode, and basically everything go to hell in a handbasket? Why don't you comment down below or drop us a tweet?